Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code, the Forex Super Model, and this is the daily briefing for Thursday the 7th of January 2021. The time has just gone 0500 in the morning, UK time. Asian session just coming to a close, European session firing up, and our lunchtime will be the North American US session. So let's have a look. I've written this up to save time again. So yesterday, which was Wednesday the 6th, the bracketed flows were as follows then. So we had a positive opposed driver in the euro at plus 141, and it was opposed by the dollar at plus 19, and then you've got positive front and back door flows going back the other way, predominantly out of the yen at minus 124, and to a lesser extent out of the pound at minus 36. So that was yesterday, and that was on activity of plus 160. We'll just rattle through these and then we'll talk about them in a minute. So intra-week then, so this is from Monday the 4th's opening, becoming more relevant as we're hitting further through the week. So we're Thursday now. Excuse me. Right. So and interestingly, we've got the euro acting as the unopposed positive driver at plus 277, and so we've got no backdoor flows, but opposing negative flows going the other way, predominantly coming out of the pound at minus 186. With the yen and the dollar losing ground, but on a steady sort of minus 42, minus 49 basis, and that was on activity of minus 277. Excuse me again. Right, so finally the most up-to-date flows, which are for today, Thursday morning, which is the 7th. We've got yen acting as the unopposed negative driver at minus 26. And so we've got no backdoor flows, but we've got front door opposing positive flows going fairly equally, but ultimately into the euro at plus 14, and then the pound at plus 7, and the dollar at plus 5, and that was on activity of plus or minus 26. Fairly light activity at the start of today. So what's going to knock this around? Thursday we've got Euro retail sales and US service PMI. Tomorrow we're leading into the non-farm payrolls and some tier 1 CAD data, which you normally get tagged on that Friday. And then over into next week we've got a fair bit of tier 1 US data. We had the Fed minutes last night, which didn't rock the boat too much, but the takeaway from that really is that it's business as usual to a certain extent. They're making noises about changing the tapering slightly, extending the long end of the buying purchases on the yield curve. Yeah, fine. Nothing to rock the boat too much. But we had bigger political sort of geopolitical issues in the US with the so-called storming of the Senate building by so-called terrorists again, and there's an example of an asymmetric response in terms of bias. You can be neutral as a trader, but you need to recognise certain asymmetric biases. Now when certain other people were protesting earlier in the year prior to the election, they were viewed as peaceful protesters. Now we've got terrorists storming on the other side. But as I say, we're not here to make any political statements. We're on the fence politically, which is unusual for us, but we really are not getting involved in that side of things. However, we are aware that this generates an asymmetric response, which we may be able to benefit from in the future from a forex perspective. Right. So let's put this into context then. Excuse me, I can't stop that, but at the moment, right. So yesterday we had euro strength, opposed euro strength, and really at the expense of yen, and we had a little bit of dollar strength. Dollar was acting as the positive rock. Now, over the week, which is becoming more significant now, the intra-week flows, we've basically got euro strength off the back of the pound weakness. So whilst it may appear that the dollar has been getting pummeled, from a complex perspective, it's actually not really that so. The dollar has been minus 49 over the week, and the main action has been in pumping up the euro and taking funds out of, or flows out of the pound, the GBP, and so far today we've still got a bit of euro strength off very low flows, and we've got yen weakness. Now, equities took they had a little bit of a fright yesterday with that geopolitical stuff going on in Washington, and they're starting to sort of think about bounce back, but they've been fairly lackluster all week. Gold's been on the up. Gold is like the sort of it's like talking to the sort of the know-it-all in the pub. They say safe haven, and the analysts are touting a dollar weakness, which actually hasn't really been the case. So dollar weakness is not driving gold. So that's something to bear in mind. It's likely to be the usual people, jumping on gold because of a safe haven issue, or maybe a few other minor issues. But anyway, we'll leave gold. So let's tidy this up then. So what are we looking at? We're still operating on these trades, these three positional trades. The pound New Zealand, as we said, was very likely to be soft, and it is so. We've been thumped down 200 points on our trade. Obviously, it's not cost us 200 points because we've been hedged, but nevertheless, it's starting to play to the script. Whereas the AUD NZD and the pound Swiss franc are fairly static, slightly soft. So the pound NZD is still soft, and we believe it's likely to remain soft. It seems to be the favoured commodity currency to take the hit at the moment. So let's just tidy this up then. So come off the fence, right? So yesterday we had euro strength. Over the week we've had euro strength. And remember that an unopposed positive driver means one of two things. It either means a top, so it's either a near-term top, or it's the start of a major ramp up in the euro. Now that's a possibility. And then we've got yen. We've got yen weakness today, which suggests that equities are going to have a go today. So it's likely we're going to get risk on. So we're going to get yen weakness in the equity transmission. We're going to get equities rising. Gold may struggle in that environment, so gold's likely to plateau. So you're going to get yen weakness. Then you normally, in a full risk on, you'll get a little bit more dollar weakness. And then so the euro and the pound are likely to benefit from positive flows. The pound is out of favour, so the most likely scenario is the euro yen is going to carry on going up. We've got a short position in the euro yen, 20%, but it was from quite high levels. We're still expecting the euro yen to take some off, and also we've got this situation here where the euro is the unopposed positive driver. So to sum it all up, we're expecting risk on, yen weakness. So what are your options? Dollar yen, euro yen, pound yen. Now the pound's going to be weak. The dollar yen is likely to be a possibility. So arguably the best place to go is long dollar yen, given the circumstances, because the dollar is holding ground here. So the dollar's the positive rock. So that's arguably the best place to go. We're looking still at our positional trades. So I hope that's helped. See you tomorrow morning. Thank you.